Welcome back to Markets Today. It's Thursday. We are talking about fixed income and trying to understand this particular market segment. Now, just to create, the context of this conversation, the fixed income market, you have the Central Bank of Kenya coming to the market to issue bonds on behalf of the government of Kenya. These bonds tend to be largely taken up by the banks. They account for about 50% of the ownership of these bonds. The fund managers are about 20 to 25%. That is the holdings that they have. At least this is what the central bank data has to state. You and I, who make up the retail investors, are not necessarily in this particular portion when you talk about fixed income. Is this by design, or is there an opportunity for us to get into it? We are joined by Mr. Michael Obaga. He is a senior investment consultant at Cytonn. Welcome to the show, Michael.
Thank you, Mbithe. Thank you for having me.
All right. Yeah. When you're talking about fixed income,
yeah,
what are we talking about in terms of it being an asset?
First of all, before I define what fixed income is,
yes,
let me start by saying that this discussion is very important, being held right now, especially when you're having the Central Bank of Kenya rolling out the mobile security trading platform,
yes,
targeting the retail and the mass market. And we're having this discussion as well in the wake of the repealing of the interest rate cappings. Therefore, banks are able to lend at a self-regulated rate, and they're able to compete fairly in the fixed income as well, considering now they're going to have attractive returns from the interest income. Therefore, it is a fair market currently, and it is very optimistic considering now that banks are able to give competitive rates in the fixed income.
Okay.
And we've seen that the Central Bank of Kenya is going out full force, targeting the retail and the mass market.
And the mass market.
Yeah, therefore
okay,
anyone can be able to trade at the comfort of his seat using his mobile phone.
All right. So
yeah,
in other words, what you're saying is up until now, perhaps distribution has been a hindrance to getting the retail investors to actually invest directly through the central bank?
Yeah, true. Actually, we've been having a big challenge, especially for retail and individual clients who want to invest in the government securities, and you're talking about the treasury bills and the
yes,
treasury bonds. We've seen a scenario whereby you have to go through an intermediary, be it a commercial bank, a brokerage, stock brokerage, firm, or a licensed agent. So those have been the barriers. They've been impediments towards reaching out to that individual who might be having little cash, but at the end of the day, yeah,
okay,
you cannot be able to invest.
All right. So up until now, before we actually just delve into the new platform,
yeah,
you only had really two options. Either I would walk into Central Bank of Kenya,
yeah,
open a form, and
yeah,
then wait every time that they make an issuance and I can participate, or go through my bank. But some of the banks, I walked into some of the banks yesterday, and some of them were charging 1.3% with a minimum fee of 1,600 to purchase any bond. And I thought that can't allow me to purchase if I'm doing anything below 1 million shillings.
Yeah, and those are the red tapes the Central Bank of Kenya has been able now to do away with,
okay,
especially with this mobile platform, the dubbing Treasury Mobile Direct. So you can be able to trade directly, especially when you have an amount which is less than 140.
But
remember, 140,000 is the amount, is the
yes,
minimum threshold amount
that you can
be able to transfer using your phone.
Your M-Pesa.
Yeah.
For this Treasury Mobile Direct,
yeah,
I still have to go and open a CDS account physically with the central bank?
Yeah, because that is a crucial step, because you need to go there and register yourself in terms of documentation, what you call KYC, so that they know who this is, so that you can be able to capture well your details. Remember, whenever funds are involved, the issuer who happens to be the government of Kenya, and the agent who's the Central Bank of Kenya, needs at least to capture your details correctly in terms of know your residential address, your next of kin,
okay,
and all those details. So those ones are crucial.
Those are crucial,
thereafter, you can be able now to trade using the platform without you necessarily visiting an agent or going to the Central Bank of Kenya.
Perhaps this is a question we need to ask Central Bank directly, because every bank has our documentation.
Exactly.
My bank knows where I stay.
Yeah.
So I don't know why I need to do this yet again, but that's a conversation for another day. The conclusion for this part is the government is actually beginning to offer this to the retail segment. You just need to be able to download this mobile platform and then use it to trade directly, but you must open an account first.
Yeah, exactly.
Okay, so that's a fixed income asset class. How does it generally compare when you're looking at returns in fixed income generally?
Yeah, maybe as you had asked me earlier to define what fixed income assets is. A fixed income investment is simply, it's a debt instrument that is being issued by maybe a government agency or a corporate, so that the funds they raise from this instrument will go towards either, assisting or expanding their operations. And in return, you as an investor, you'll be able to get, a regular interest return in terms of a coupon, which is payable to you monthly, quarterly, semi-annually, annually, or until maturity.
Okay.
So after which the period of investment has elapsed, now you will be able to access your principal investment.
Okay, fantastic. And we have the T-bills and we do have the treasury bonds as well.
Yeah, in terms of classification, generally you can be able to classify fixed income investments into two. You can either say they're government issued and non-government issued. And when you're looking at government issued fixed income products, we're looking at treasury bills and treasury bonds. And remember, treasury bills are short-term, whereas treasury bonds are long-term.
They're longer term.
For example, we have the 91-day paper, which is currently today's auction was yielding around 7.3%. We have the 182 paper, which is yielding around 8.2%. And we have the 364-day paper, which is issuing 9.8%.
So 9.8% for 1 year paper that you give.
1 year bill.
Is there withholding tax? Are there any applicable taxes?
Yeah, there are taxes which apply. However, it's good to know that, especially after other than the government securities, we also have privately offered fixed income products.
Okay.
We're looking at commercial papers, which are short term.
That's
we're looking at corporate bonds.
We can't discuss that, Michael. Nobody invests in that. People have lost money in Nakura.
Not always, actually. We do have, not always.
So, Cytonn, you do have an issuance?
No, we don't have currently an issuance in a commercial paper.
Yes.
But what we have is that we have both, we have money market products, which are publicly offered, and we also have alternative investment products, which are privately offered.
Okay, so that's...
which come in form of notes and, other papers.
Okay.
Yeah.
We will discuss that later. I just wanted us to finish off on the 364-day paper is giving you a return of about 9.8%. But then there is an applicable tax on it.
Yeah.
That's the withholding tax.
Yeah.
What is the rate of the withholding tax?
Withholding tax has always been 15%.
15%.
On the interest.
Okay, so that would be on the interest.
On the interest, yeah.
And the T-bills, if I wanted to buy for 100,000, they do say that for the T-bills, you offer your money at a discounted rate.
Yeah.
What would that mean if I want to put 100,000 yet the return is 9.8%?
Now, what happens is that the 9.8 will accrue on the 9.8% will be on the amount you've invested.
Okay.
Therefore, regardless, especially now that you're getting into the mobile platform,
yes,
you'll always stand a chance of getting your return.
Or you'll get your return.
Yeah.
All right. Then the bond market, that's the longer dated paper that the central bank issues on behalf of the government of Kenya. I know there are two issuances that are currently running. They close next week on Tuesday.
Yeah.
We have the 15-year, we have the 25-year paper. What are your thoughts on both papers?
They are attractive to the investors, and we've seen that the 15-year bond does not give a rate. It's market determined, and then you have the 25-year bond, which is giving a return of 13.4.
Yes, 13.4.
So we're looking at a good subscription. It's just that you're waiting to see what how the subscription will be.
If you were to put your money in the 15-year, what would your price be?
I don't want to speculate, but
I mean, you must be guiding your client.
What I'll do, I'll refer to the previous bonds.
Okay.
For the same period of time.
All right.
And then I'll want to, I'll be able to bid a good rate.
Do you have a sense of what maybe the last issuance for 15-year, or do you have a rate of where the 15-year is priced at today?
Yeah, somewhere between 12 to 12.5.
12 to 12.5.
Yeah.
So I can either give my money to the government for 15 years at about 12.5, or I can give it to them for 20, it's about 23 and a half years.
Yeah, 23 and a half.
For 13.4.
Yeah.
Why would I want to give it to them for 23 years at 13.4 instead of just...
Because you're investing with government at the end of the day.
15 years?
Yeah.
is giving me 12.5.
You know, what happens with it is that investment has been a function of time and
Yes.
also the amount.
That's
so
what
the longer
we're
the period, therefore, you're going to get a better or a more
Okay, Michael.
competitive rate compared to a shorter period of time.
But, Michael,
Yeah.
25 years is 10 years, more than 15 years.
Yeah.
15 years is 12.5.
Yeah.
Why would I want to give money to the government for an extra 10 years, yet the price differential, the coupon that I'm getting is 13.4 versus 12.5? That's 90 bips.
Yeah, you know, sometimes you can as well be optimistic in the
Yes.
sense that sometimes there are, you know, some aspects which change, especially when you're investing in long term. There are many parameters and matrices which can keep on changing as opposed to investing in the short term.
In the short term, okay.
So looking at the rate of inflation currently and
Yes.
comparing it with the return, this is a return that can be able to outperform
It
inflation.
can, okay.
Yeah, and therefore this is a good investment to look at.
Actually, you've preempted my question.
Yeah.
And I wanted to understand what the growth drivers or the key considerations need to be over a 15-year period, over a 25-year period.
Yeah.
But I see we need to take a quick break. Maybe we can answer that when we come back.
Okay.
We take a short break. We want to hear your questions, your interest in as far as fixed income is concerned. Our focus today is the treasury bills and the treasury bonds. Would you invest in them directly, or how have you been doing it to date? That's a conversation we will keep having. Tweet with us, and that is Bithe Mwema on Twitter or Metropole TV on Twitter. See you in a few.